So today is Thursday, the 2nd of April, 2009. Brian Shannon here from AlphaTrends.net. We had a big up day here today. The NASDAQ 100 finished with a gain of 3.22% as the market did gap higher, of course, and quickly ran up above and held above that 31 level I had mentioned yesterday, saying that basically it needed to get above and hold above here for at least a half hour. Then it would put that 3180 level into play. And obviously, 3180 was breached intraday, but you can see that we did pull back from that as well. So the market continues to provide massive opportunities intraday with this incredible volatility that we're seeing this morning. It was that gap higher, kind of chugged along a little bit, held above those VWAPs. I had mentioned that on Twitter that it recaptured the VWAPs and the trend was then higher again. It held those VWAPs, or the VWAP rather, saying the VWAPs from the major markets, that is. We came down, tested it, and looked like maybe we were going to break down there, but got a nice bounce. I had sketched an outline of a potential scenario on StockTwits as well, and it looked like this. So basically what I was looking for at that time of the test in the NASDAQ was a rally up and then a failure of the VWAP to hold. It didn't work out exactly the way I thought it would, but it did rally up from that level and then fail. I thought we were going to see a more of a failure below the daily VWAP, but for a big update today, the sellers were able to gain control of the average price here. There's nothing to suggest that this rally is over or completed, but a failure here would be pretty bad for the bullish case, as a lot of times we see with a primary downtrend that is evidenced by a longer moving average like this, that these breakouts that occur after a big move tend to fail. Last week I was pointing out to the USO and the fact that it had so-called broken out and was above this 50-day moving average. I said a lot of times we get a retest of that 50-day moving average. Big bounce in oil from there today. I'm not going to talk about oil, but back to just using that as an example, we could see a similar scenario unfold, that maybe we get a pullback towards the 50-day moving average. I don't think that's there yet, but in fact, I know it's not there yet because there's nothing here to suggest this rally's failing. If we take a look at the average price, again, since this rally has begun, the sellers have never taken back control since that gap higher, and I think that's important as far as how strong this rally actually is and has been over the last couple weeks. The fact is the buyers have maintained control the entire time that it gapped higher there. So we've yet to see any meaningful pullback. We've saw a little bit of a time correction here, and again, that took out what was looking like resistance here yesterday. I said it was impressive that the market gapped lower and then finished higher, and the market just seems to be gapping every day. 1, 2, 3, 4 days in a row we've seen some significant gaps, actually 5, 6. I mean, you can go back. We've seen a lot of gapping action in this market. It's kind of trading like an ADR, American Depository Receipt. But the fact remains, short term, short to intermediate term, we remain in an uptrend. We've got a rising 5-day moving average again, I think, breaking back below probably this level here, $30.80. That's what would do the bigger damage to this market. But right now, I don't see anything here that suggests that a bigger failure is going to happen. I would prefer that we see a move back down into the range and then consolidate some more through time. Let's take a look at the financials. They were up 25 cents, closing at $9.31. You can see here we have a red candle, meaning that the close was lower than where this group had opened. We did close right on that trend line as well, but still below, more importantly, this recent level of resistance. So breaking a trend line doesn't mean you're going to move higher. It means the rate of descent has slowed here. Perhaps we're going to turn more sideways. The bigger level of support continues to be down near about $8.40. If we look at the 30-minute time frame, you can see that this has been the weakest group here today. It was relatively underperforming, even though it was up 2.7%. It's underperforming here over the last couple of weeks because it's not pushing past those levels. And if we take a look at the average price since the rally began, we're still clearly above that after having just dropped down through it at one point. So again, $8.40 is our more important level of potential support in the financials. I think that right now these things are basically neutral, and really you're better off trading some of the other indices unless we break out past here. If we can break out past this level, then perhaps we're going to see further upside. The $9.10 level was the area where we were looking for potential resistance today. Obviously, we gapped above there. As far as the intraday pattern goes, though, you can see this is how you can say, even though it was up 2.76%, which was approximately equal to the same percentage gain as the S&P 500, which is up 2.92%. The difference is that the financials were basically controlled by sellers all day, as the market was underneath the financials, that is the XLF, was underneath a declining daily VWAP in here throughout the day. So it gives a little bit of reason to think that maybe we're going to consolidate, continue to consolidate through time. First level of potential support right now is about 910, but I would give it down to about 9 because that's where that 5-day moving average is. As for the Russell 2000, it was up $2.14 or 5%. I was looking late in the day for a failure of this VWAP, and maybe what I was saying, I didn't mention it, was maybe a pullback down towards that 2-day VWAP. Obviously that didn't occur. It got very choppy in here. The 30-minute time frame, you can see we did break out to a new high for this move. That puts the average price of this move right now at about $41 a share. And going back to the daily time frame, we're seeing this pattern of this higher low and now a higher high in here. We are a little extended to the upside, but I think a pullback down towards that 50-day moving average would still continue to be healthy in here. Otherwise, if we continue to rally, I would expect that this level up near about 47.5 will be the likely level where the sellers begin to defend the market. Again, nothing to suggest that this market has topped. In fact, quite the contrary. I think we trapped some short sellers in there with that move below the 5-day moving average, and as we saw yesterday, it flattened out. It got back above this level, gapped up above that level, and it remains very very impressive, the strength in this market. I think that what's driving it is, one, there's the short sellers who are getting squeezed in there, and there's a lot of people now who have been on the sidelines feeling as though they've missed out on this move and are chasing prices, and that's a very dangerous market condition where we have these shorts chasing the market higher, and maybe not the smartest money from the sidelines coming in and chasing prices as well. Only price pays, so as long as it continues to rally, you want to be looking mainly at the long side, but there are obviously some good opportunities on the short side as well. Celgene was a great example of that the other day, and this Gilead, G-I-L-D, I'd mentioned that this is my go-to stock on the short side today. Gilead Sciences, this stock looking like it's due to drop further. I'll talk more about that in the next live session I do, but let's go back to these semiconductors. They were unable to make a new high here, so we did see sellers emerge right at this level where the previous area where we had found them here. So we didn't see the new high in here. We're seeing more of a neutral market. Perhaps this is our new range in here, but if it can get back above this level and hold above there for, again, maybe more than a half hour or so, and let's just delete that line because this almost tags that perfectly. I'd still like to see it consolidate further, but the market is not going to adhere to our wishes, certainly not mine. We have to remain open-minded and trade what we see, because a lot of times what we're seeing doesn't make sense, and if that's the case, that it doesn't make sense and you don't want to fight it, it's better to be on the sidelines. I'll say that again. It's better to be on the sidelines wishing you were in than to be in and wishing you were out, the way a lot of short sellers are right now. Basically, though, this market, the S&P is still down for the year, obviously, but if we take a look at the volume weighted average price from the lows of December, maybe someone told me to look at the lows of October. We're basically there. So we've really moved nowhere over the last, what is this, 6 months or so, based on the average price. If we look at this rally, it's been a hell of a rally, and we found support multiple times at that rising VWAP in here. But after market, I'm seeing right now we're up another 50 cents in here. That's probably, I don't know, I think Research and Motion was reporting earnings tonight. But market continues to be strong here. Picking a top in this rally is just as foolish as picking the bottom as it was declining here. Wait for the evidence to say that we're moving lower once again, and right now the evidence just isn't there.